You are listening to Charting Wealth's weekly review and forecast for Monday, the 12th of October. It is great to have you with us. How do we always start? Well, we always start with IYY. What is that? That is an ETF that reflects the total market. It's actually the iShares Dow Jones US Total Market Index Fund. It's an exchange traded fund and it reflects every stock in the market. And what do we see going on there? Well, on the weekly chart, the entire market rolled over going down in May of this year, actually going into probably Friday the 5th of June. We're looking at Fridays as our snapshots for the end of a week. And the market has been going down since then. And sort of it looks as if it may have bottomed somewhere. Well, it struck a huge low during that crazy day where the markets tumbled. And that was the week ending the 28th of August. That was after the Fed meeting. And then what's happened is the market has slowly ticked up. There was a bit of a drop off around the 2nd of October, and the market has tried to start climbing again. It does appear that there is a converging, a coming together of the MACD and the signal line. Those of you who are new to the broadcast may say, what is the MACD? Well, that's the moving average convergence divergence indicator. Got a lot of good training on our website. You can go to chartingwealth.com, learn more about it. What does it mean? Well, it means when you see the blue line on the chart cross over the red, that there is enough mathematically going on with the moving averages and with the converging and or diverging of the changes in price. And when it crosses the signal line, it means that is a strong indicator that the market is in an up move, or the stock or the commodity, whatever it is that you're looking at. We also team that up with the derivative oscillator, and we see on the derivative oscillator that it is losing its speed. And it is represented on our charts. Those of you who watch it a lot listen by audio, and I try to explain everything that we're seeing. It is a red or a green line, sort of a box that's opaque, that's on the bottom of our charts. And we can see for the weekly chart on the total market, it is losing its speed, going toward green. It hadn't turned green yet, but it is also losing its downward speed. So I guess you could say it's gaining momentum going upwards. Now, does that mean that can't change? Of course it can. But that's where we see the market right now. So we see the price action over the last week going up. The week before, the market had gone down substantially. And now we see the market attempting to gain steam. Also, on our chart, we have a trend line that we've been able to draw. It's a 2-day trend line. It only reflects 2 candles, so it's not a strong, good line yet. But the market finished above that line. And we also have on that chart a purple ceiling that we drew. The market at one point went above it but settled below that. And that is where we found some resistance to the market continuing to go up. So we'll continue to watch and see if it pushes through that. But market is a long-term downtrend as far as the MACD goes and our derivative oscillator, and we're trying to see if it's going to break that. Now, we will continue to go through all of these various charts, look at both the weekly and the daily. On the IYY, the total market, we're now looking at the daily. It's a completely different picture than you see in the 5-day weekly chart. What do we see going on here? Excuse me, I wanted to have a little drink of tea there. We see a crossover going up around the 2nd of October, and it's beautiful when you see the MACD crossover at the same time you see the derivative oscillator, because that typically means the move is strong and will be sustained. Those are always great indicators. The moving average convergence divergence and the MACD and the derivative oscillator moving at the same time, those are great for us. We love to see that. We can see our blue 2-day trend line. We are above that in our price movement, and we have continued to rocket up. It shows a ceiling that we drew here, and in fact, on a daily chart, actually, the ceiling could be a little bit higher. The ceiling we have is the 2-day chart, and remember, 2-day charts start and end at different times than 1-day charts. And it really looks like if you, and I'm not going to adjust my 2-day chart here, but if you compare back on the 17th of September with the ending chart on Friday the 9th, you can tell that they are about where they were. So in other words, it has hit its ceiling. It's not quite pushed through it yet. Again, as the week starts, we want to see, does that momentum continue or does the market fall off? That's one thing that we've been really focusing on a lot, is a potential resistance, and it has not gone above it yet. So we want to continue to watch that. Now, let's revert back. So that's where we are on the total market. Now let's check out SPY. What is that? Well, that's the Standard & Poor's 500. What's it doing? Well, it's trying to do the same thing on the weekly chart. It crossed over going down around the same time period, around the 29th or so of May on into the 5th of June, and it's continued to move down since then. It too is trying to come together on the MACD, it appears. The derivative oscillator is weakening its speed. Market is above the 2-day average, but it hasn't pierced the ceiling that we've seen here recently either. It hasn't had the speed or the momentum to get above that. So we'll continue to watch. That is on the 2-day chart. Let's revert over quickly to the 1-day and see if it tells us anything different. Well, again, it did actually push through. Even if we redrew the line on the daily, it pushed through it. And it crossed over going up back on the first morning of the 2nd of October. So we have a sustained uptrend, not on the daily, not on the weekly, but on the daily on SPY. Again, what do we always feel much more confident about? Well, that is when our weekly and our daily are going in the same direction. Daily is up, weekly is down, although it looks like the weekly's trying to change that over. So we'll continue to monitor that. Keep that in mind as you go into the week, knowing that the long-term trend is down. Now we look at the Qs. Like the other two charts we've looked at, we've also drawn on the Qs our ceiling, and we see that it has not been breached. We see, just like the other two charts, the MACD is trying to come together. Derivative oscillator is losing its downward momentum. So we'll continue to watch that on the Qs. All three of these charts are mimicking each other somewhat. And the Qs has pushed above the ceiling. It is above the 2-day trend line, and it crossed over going up on the 2nd. So again, sustained upward movements on the Qs, but keeping in mind that the downward pressure is still there from the large chart. Okay, lastly, going to go back to the weekly, and we're going to go take a look at gold. What has gold been doing? Well, gold crossed over going down back in the end of June, moved down pretty sharply, bottomed out. We talked about this bottom several times when that was happening. Then it turned over and started moving up. And it finally crossed over going up on the weekly after sort of sliding sideways for a few weeks on the 18th, the week ending the 18th. And we have seen some upward movement since then. Now, so it is in a confirmed up move on the big chart. Let's take a look at the daily. And it crossed over on the daily on the 17th, moving up, then tracked back down, and then crossed back over on the 5th. When I said the 17th, I'm sorry, I need to give you the month, the 17th of September. Then crossed over going down around the 30th of September, and then back over going up on the 5th. And you might say, that's a lot of up-down movement everywhere. That's not the chart we go by. We're in a confirmed up move on gold on both the weekly and the daily. What chart do we love? Well, those of you who follow us every day know that it's that half-day chart that is the best chart, that shows you we see over and over again good buy-in points for gold, or sell points. Hopefully you would be buying at each of these points. You would have already sold and made your profit. You would be buying an inverse fund in gold where it crosses over going down, and you'd be buying gold when it crosses over going up, like it did the morning of the 5th of October. And when we say buy, we're not a stock calling service. We don't give you advice on what to buy and what not to buy. What we are talking about when we refer to buy is this is all about training, and that you would be buying a virtual gold fund. Well, you'd be buying gold virtually after you opened your trading account online at any of the brokerage firms. Okay, what do we always do here on the weekly review and forecast? We always talk about what happened over the last week, where things might be going. Well, for the week ending the 9th of October 2015, we saw a lot of interesting things. Global markets appeared to sort of rebound. Why? Now, this is the real kicker for me. Because of September's disappointing U.S. payrolls, it ends up meaning that an extended period of interest rates, that is about zero interest rates, should continue. Weak United Kingdom, German, U.S. economic data underscores the need for what? More supportive bank policies, that is, central bank policies to counter more global economic weakness. So get this, because the economies are weak across the world, and because we can't raise interest rates above zero, which we've not seen in the history of mankind for any period like this, we're going to continue to keep the interest rates at zero, and that makes the market go up. That's right. As crazy as that sounds, that is what we're hearing. Now, what did we hear last time when the Fed came out and said that? Well, we saw the market bump up, and then it went back down, didn't it? It did that just a few weeks ago, so keep that in mind. So the Fed's concerned about global weakness. They're also concerned about low inflation. The U.S. trade deficit, it fell. And as exports, the exact opposite. U.S. Trade deficit grew as exports fell. It was exports that fell, which means that we're not exporting nearly as much as we should. Get this, the U.S. trade deficit has widened 15+% to about $48 billion. Why? Well, we're told that a strong U.S. dollar and, of course, weak demand across the world is causing that. Not good for our economy. U.S. imports fall less than expected. U.S. trade service, we're pretty much a service economy now, thanks to NAFTA and GATT and all these other things, and the TPP and the TAPP are about to kick in, transatlantic and the trans-Pacific partnerships. Well, what do we see now? Since we're just service pretty much, well, we see the Supply Management Non-Manufacturing Index fell from 59 to 56.9. That's from August to September. And that is a gauge of production, of service productions, and it has declined. And these measures show us that we are growing slower than we have in the past. Again, not good news. We do hear that the Pacific Rim has reached a trade pact, that is the United States and 11 other Pacific Rim countries. This excludes China, but we're going to see ourselves entering into a common set of standards to reduce or eliminate tariffs on close to 18,000 categories of goods. So that giant sucking sound that Ross Perot talked about going south, well, it won't be going south anymore. It'll be going east, or I guess way, way far west, depending on how you look at it. The Eurozone gauge shows slower growth. German exports and factory orders have ended up falling. The UK trade deficit grows higher than forecast. I mean, again, not good stuff. So that's where we have been this last week. We'll continue to watch and see how that portends in the market, or actually plays out in the market over the next week. Not good news. The only good news is the government's going to continue with free money. That's what's driven the market kicking up. How long can it do that? Well, there's always a payday, my friends, always. That's why we stay liquid. We watch the markets. We're ready to get in and get out when the getting in and getting out are good. And that's the beautiful thing about following the charts, is when things do turn over, you'll know it first. You'll be reactive. You'll be able to get into an inverse fund or just pull your money back and hold on to it and protect it. So pay attention, continue to study, continue to learn. Now, lastly, what do we see in the week ahead? Well, not necessarily a whole lot. There may be some good or bad stock reports coming out, but China's consumer and price producer indices are going to be out on Tuesday. On Wednesday, the UK labor market's going to release its report. That's on Wednesday the 14th. And on Thursday, U.S. Consumer Price Index is going to be reported. So we're going to see a lot of things happen as far as earnings reports go. J.P. Morgan, Johnson & Johnson, Intel is going to be on Tuesday. They don't usually talk a lot about that, but again, you're going to see some banking sector stuff on the 14th. That's Wednesday. Wells Fargo, Google, and Bank of America. So those could have some impacts on the market. But again, remember, there's not a lot holding the market up there except free money, and that's enough for now. So be careful. If you have not already signed up for and gotten and watched and studied our 15-minute How to Read a Stock Chart video, we need to hear from you. Same thing is if you like the charts that we use from freestockcharts.com. We have the layout we'll send you for free. And again, the operative word there is free. And you can have exactly the same setup that we have as far as the layout goes at freestockcharts.com. So we'd like to hear from you. How do you get both those things? You just email us. Charting Wealth is our website, chartingwealth.com. You email us, CW, as in Charting Wealth, CW at chartingwealth.com. We'll send you those things as soon as we get your email. Thanks so much for listening. Hope that you have had a great week in the markets and that you have a great week coming up. Let us hear from you. God bless from chartingwealth.com.